Hello, founders. Welcome to Startups.com. We are live. We have an amazing show for you today. We have our guest advisor joining us, Kirsten Barrie. We'll let her introduce herself in just a moment. I am joined, as always, by Q, our producer and one of our editors here. And then we have Jen joining us. She's going to be watching the Q&A box and the chat. Make sure you load your questions in if you have them going. Before I continue, I'm going to just share that this show is brought to you by us here at Startups.com. One of the things you want to check out is the Startup Therapy podcast, and that is a no BS conversation look between our CEO, Will Schroeder, and our CMO, Ryan Rattan, and they talk about all the stuff that founders don't talk about on these types of podcasts and these shows, and they just really get into the nitty-gritty and all these different topics where you get disillusioned, all the emotional stuff, all the things that'll happen that you might not necessarily know who you're going to talk to. Startup Therapy Podcast is the reason I came to Startups.com, because I was going through a really, really bad founder divorce. Everything was breaking apart, and I listened to the podcast and I said, I really need to hang out with these guys, and here I am. The rest is history. With that being said, like I said, got a great show for you today. I'm going to introduce our guest advisor, Kirsten. Welcome. Give us a little bit of a thumbnail about who you are and what you do, what makes you so special.
Well, first, I want to join in on the shout out to the podcast. It really is relevant to all the things founders are going through, but maybe don't want to speak about. So I agree with you. It really is special. I'm Kirsten Barrie. I run an accounting firm. What makes me and my firm unique is that we are very modern. We're very high tech. We specialize in data science and financial metrics, and really use that to move the needle on the dial with businesses.
And you will drop in, like, you'll help a startup how? Like, what is the way that you've been most impactful with startups, especially our members?
Well, I'm kind of like the bad cop. I come in and I let them know that usually their financials are unrealistic or inaccurate or missing certain things. So when they're trying to, depending on where they're at, angel, seed, series A, depending, I won't let them get away with incomplete financials and incomplete information. So I come in and I kind of kick their butt.
And what's so important about that for everybody who's watching and who's going to be watching this later on the recording is investors are not going to let you get away with it. So you'd rather work all that stuff through with Kirsten, because no matter how much of a bad cop Kirsten acts, she is going to be nowhere close to how an investor is going to treat you, or what the investor is going to say to you. So you might as well run the gauntlet and practice and go through your exhibition matches and learn how to do financials with Kirsten. And that's the benefit of sharing. I can't stress enough where founders just don't pay attention to their financials. And then investors, because they deal with money all day long, they can calculate in their head and go, wait a second. And like, one of the common things that we got going on right now is founders will send me a pitch deck and they'll say, we need $500K to hire 2 AI engineers. I'd be like, well, that's it. All your money's going. You haven't thought, and they've got like money for marketing and for all these other things and their own salaries and all that good stuff. And I go, I don't think you quite understand. And that's what Kirsten is talking about in terms of things being unrealistic. Kirsten, what are some other situations or stories you run into where a founder maybe listening or watching this is going to say, oh, yeah, that's me, but it's okay if it's you. That's the reason people want to talk to you. What have you encountered?
Yeah, I want to reiterate that it's very emotionless to me. So it's better to work with me on it because they're just numbers, and I'm just trying to get the 2 + 2 to equal 4 for founders. I don't have any like vested interest, and my heart's not gonna be broken if you can't hire somebody. I'm going to be the one that's going to say, you don't have the funds to hire this, or this, your hiring is completely out of proportion. Some of the most common things that I see is that founders don't realize the levers that it takes to grow the business. So investors want to see 5 years, despite, even if like 3 to 5, and tell me, Ed, if you found this too, but years 3 to 5 could be unknown and everyone kind of knows that, but you need to show that you're a good operator and that you are still looking at those 5 years and you're demonstrating that. So you need to be able to figure out how, when you hire, so for example, say every chunk of new customers, you want to hire certain admin and developers. You need to know that if they go through the onboarding process, they are no longer in the bucket that you need to hire some more. So you need to do some complicated math to know, like, these 100 customers have come, they've been addressed, they've moved on. I don't need to hire new staff because the next 100 are still being addressed by the current staff. So I think that I've noticed weird math starts being done when they're like every 100 equals new 3 staff, and that math doesn't actually project out because then you have like
Gotcha.
100 staff in 2 years.
Okay.
And then the other one that I see a lot is they break down on the assumptions part. It's really hard for them to know how many sales they're going to get for the marketing channels they're going to be doing. And that you can do research on that. You can see benchmarks. There's a lot of data out there, but I find that the decision fatigue, that moment that founders just cannot grapple with, and they just get paralyzed.
Yeah.
And yeah, so yeah, tell me what you think on that, on the 3 to 5 years part.
Well,
You
it
notice
really,
that too?
it depends, right? Because Kirsten, you deal with businesses at all different levels and
Yeah.
they're generating revenue. I mainly deal with early stage. And I really appreciate you saying the word decision fatigue, because I never thought of it that way. Because yeah, you can get pretty tired of trying to plug those numbers in and doing research. What I always say is you need to learn how to not run out of money. And that involves projections, cash flow, things of that nature. So you have to work with someone like you or learn. And most founders don't get this education until later, or they pay out the nose to have their books fixed. You have to know how to run your financial model. So run your financial model, know how to project. But in an early stage, if somebody gives me a 3 to 5 year projection and shows it to me, my eyes gloss over. That's going to come. I need to know you know how to do it. But what's most important, and again, Kirsten, this is where someone like you helps founders, the two most important things, and let me just be super clear for everybody out there, when you are raising capital in your early stage and you're not making money, there are two financial pictures that an investor needs to see. The first one is your unit economics. You have to understand what your product costs. The other day, I was talking to a founder and he said, well, I can't calculate my market and I can't calculate how much I'd sell it for. And I said, well, then don't talk to investors and don't talk to customers. And he said, well, how can I if I haven't built my prototype? And I said, that's where you have to extrapolate. So go contact your engineering company that's doing your prototype and ask them, if I made 10,000 of these, how much would it cost? And then I made 100,000. That is your job. That is not the job for the investor to do it. So one, you have to know your unit economics inside out. Investors will ask you, I've been on calls, pitch competitions, where an investor will literally ask, all right, someone's paying $30 a month. How much are you taking home of that? What is the cost of that? And if the founder fumbles, it's game over. It's really bad. The second, what you brought up, Kirsten, I'm glad you brought it up, is the customer acquisition costs. So the assumptions, you have to know how to calculate that. And the more data you have, the more you've experimented with Facebook ads, more you've experimented with commissions, affiliates, whatever you've done, the more data you can give to Kirsten, you can kind of crunch it. So you know if cost suddenly goes up, now you're, instead of paying $2.50 a lead, you're paying $5. How does that affect your entire financial model? So cost of customer acquisition costs, that model, you have to have that locked down for investors or they are not going to take you seriously. And thankfully, there are people like Kirsten who enjoy looking at numbers unemotionally, who will sit and walk you through that. How'd I do, Kirsten?
Exactly. I have so many things to add to that. If you're a SaaS and you're listening to this, you need to know your CAC payback. So if you don't know what that means, at the end of this, go look this up, go figure it out, contact someone like myself to help you. It's these metrics. You just have to know if you have a accurate financial model, you can't answer these questions on the fly. You may have to look at it in the meeting because you're being maybe, machine gun questions, but you can immediately access that information if your model is done correctly. I've been really fortunate that a lot of founders come to me do have the unit economics. They usually have like I usually notice like 4 to 6 scenarios that they've researched, which is really impressive on their part. So they've actually gone and figured out like, how much would this dev team cost me versus this dev team in a different country, et cetera. So you do need to do that. That would set you apart from being an employee versus a startup founder.
Absolutely. What I would like all of you founders to know is that in the due diligence, everything comes up. If you haven't calculated it, if you're just faking it, in due diligence, it comes up. Let me give you another example where founders end up shooting themselves in the foot and they look so bad for investors. They lose that opportunity. For example, there's a difference between ARR, okay, annual recurring revenue, and run rate. And I've seen a very simple thing where I'll look at financials and their business model doesn't lend to ARR and they say, we are reaching this ARR. And then there's NRR, and I'll let you all look that up, which is another metric. So investors have got all these different rubrics. And if you don't understand and you're not willing to talk about it, you're going to be in so much trouble. And if I can pick these out, and I don't have the financial eye that Kirsten does, I'm not used to it, I can pick these out as red flags. How much more investors, if they're going to be writing you a $500,000 check, I'll give you all an inside scoop. Okay. I worked at a fund, right? I was a general partner. I did scouting, everything like that. As soon as a founder sent me their financials and sent me how much money they think they're going to make, I said, okay, now send me all the raw data. And we built our own financial models. We actually pushed it through. Why? Because if I'm going to be writing a check using a limited partner's money, I have a fiduciary responsibility to them. And if I haven't done my homework, I go, oh, I just believe what the founder said. That's what I'm going to do. Oh, yeah, they promised me that this was all on the level and things made sense. They're going to look at me like, what is wrong with you? We are never going to trust you with another dollar again, to invest on our behalf. So if then the founder sends me erroneous information and I run my models and I'm like, wait a second, everybody's out to lunch. It's a deal breaker. Even if I love your problem, I love the solution, I think you've got something, a great founder team. If we can't come to agreement in terms of the financials, you're in big trouble. And that's the reality.
Exactly.
Okay.
This is why the repeat founders have a do not pass go, or what is it? Go straight to go. But they help me out, guys. Repeat founders have a fast track to their next startup.
Yes.
Because investors know that they've gone through all this already, or they assume that they've gone through all this already. Most generally have been through the ringer on this. If you want to you're contending in this really tight market with those folks. If you want to be competitive, you do need to be on that level.
Perfect. Couldn't say it better myself.
Yeah.
Kirsten, we're going to do an exercise here. We're going to look at a pitch deck.
Okay.
And the reason I want to do this is because I want to demonstrate for founders how different people look at your pitch deck. And this is the smell test, because if one of your peers or someone who actually works on the other side of the table helping you with your financials or understands the mindset investor, if they got questions about your pitch deck, they don't understand it, well, what do you think the investor is going to do? So this recreates how we process pitch decks, because I look at 5 to 10 pitch decks a day. I love getting these reactions. We did this yesterday. Get ready. Here we go. This was sent by a founder, not one of our members, I believe, outside of our membership. FYI, spoiler alert, I have not looked at this yet. I'm just going to look at it straight, and I'm going to demo what it's like for an investor to look at these decks right from scratch. And then I'm going to bounce things off of Kirsten, and we're going to find out, hey, wait a second, people don't understand. And you're going to see how you can test this out with your peers and other professionals that you can trust before you send it to an investor. Let's jump into this pitch deck. First, it's cash. We construct efficient smart homes by using transformable layouts. We construct efficient smart homes by using transformable layouts. Kirsten, as soon as you see that, what do you understand this deck to be? How does this headline and subheadline speak to you?
It's a bit vague.
Mm-hmm.
I'm also not in this industry.
Mm-hmm.
I'm reaching for what this actually means.
Mm-hmm.
I think he's giving the solution statement. Perhaps this feels like a bit of a solution statement, and like right off the gate.
Yeah, and it is, but it's confusing right away. So now we've added some friction right to the cover slide. We construct efficient homes by using transformable layouts. What transformable layouts? I don't know what that means, right? And so if you're thinking, if you just said a new way to build or construct efficient smart homes, then you've set me up to say, okay, we're building smart homes now. Let's take a look at it. But transformable layouts, you don't want to be adding that. And I keep saying this over and over again. Don't put yourself behind the 8 ball by adding more friction to your cover slide. Just be very straightforward, non-fluffy. Don't worry about it. Just explain what you do in a nutshell so the investor can look. Next.
Can I add something to that?
Sure.
I saw a trend that I'm liking on pitch decks. You start off by sharing something that is familiar to all, but something along the lines of, we are all loving tiny homes, or we're all prefab homes, or, something that you would see on a headline that everyone would resonate with, but you connect your initial part of your deck to a familiarity and a reality that everyone is feeling to bring them in.
Okay.
The advice I've seen, and it's been really a very nice intro into the pitch deck.
Yes, great advice, but I want to break down what Kirsten said. If you're saying, oh, that's really great, I'm going to do it. She said something everybody can relate to. You have to make sure that you started off with just that. If you alienate your investor right from the get-go, and you're saying things that are hyperbolic, erroneous, cause cognitive friction, or people can't relate because they need technical knowledge, inside information, inside language, then you've lost them, and you might as well not include that slide whatsoever. So if you're going to use Kirsten's technique, make sure that you do something that everybody can relate to. And I think this leads into what we're talking about here, because it says widespread pain, homes are expensive, construction is the largest polluter, consumers dislike current options. What does this say to you in terms of the pain? Does this make sense? Your first initial reaction, Kirsten.
This is only referencing Toronto.
Okay.
So how large is this business? What's their market that they're trying to address? Because their examples are only, they have two examples only showing Toronto. I think I've even heard that it is expensive there in passing, but it's too small. It makes me start to question, like, is this a specific city issue, which is just too small of a market?
Kirsten, you couldn't have set me up better. So right away on the problem slide, you've indicated Toronto with your newspaper clippings, right? And so immediately, Kirsten went to the visual and read Toronto, the headlines, because we're looking for that social proof. Now, if your startup is saying we're going to fix homes in Toronto, then say it in your problem statement. But if you're trying to say we're going to do homes around the world and all you do is include clippings in Toronto, you create this cognitive dissonance. There's this gap that people can't jump over, and it just doesn't make sense. And now the gears start grinding. Furthermore, if we look back, we've got 3 problem statements. Pick one, okay? Or consolidate it into something that makes sense for everyone. If you came to me and you said, okay, in Toronto, let's test this out.
Yeah.
I said, if I came to you, Kirsten, and I said, right now in Toronto, homes have increased 400% year over year, in the last 5 years, which makes them absolutely prohibitive, and they're the largest polluters of the environment. How would you receive that statement?
I would want facts to back that up. In going back to the slide, it immediately made me question the 38% fact.
Right. Okay.
Yeah.
Now, okay. So that's a really good thing. So you want to see facts. And that's the reason, if you do that, I would say, according to the Census Bureau of Canada, home prices and the latest listings have gone up 400%. And a new study was released that said 38% of these homes are absolutely terrible for carbon. How would you?
Yeah, exactly. Like, you want to explain, like, what's the problem? Because you could say, like, homes have gone up 400%, but so is the wages.
Sure.
So, like, if I don't really see, but if it's like homes have gone up 400%, causing homelessness and causing this problem or something to elude why this is even a problem, I think I need to see the rest of that thought carried out.
Okay, with data, right? So now you're starting to see how an investor is immediately going to think. And this is a great example. An investor wants a clear, succinct statement that allows them to check the box and say, I believe you. That makes sense to me, right? And we don't even need a solution yet.
Yeah.
Investor just needs to understand the problem. So what I would do on this one, and we'll keep jumping through, is consolidate, make it so that you clearly show size, scope, and severity, and fix this problem statement. Because an investor, widespread pain, that's an opinion, right? Consumers dislike the current options, that's your opinion. Right? Homes are expensive. You've given us no data. That's your opinion. An investor's not going to trust you that you understand the problem. So get a lot more succinct with this and understand how to create a better problem statement and use your space. The top headline should just say everything you need to say. And if you are focusing on Toronto, these clippings are okay. If not, we'll get rid of them. Next, reimagining homes. So first off, right away, this is a hyperbolic statement. You're talking to the customer, not the investor, right? I don't care about reimagining homes. I care how you're solving the problem. But we're saying the solution, and by the way, everyone, just letting you know, do yourself a favor, and some people disagree with me on this one, but I'm going to just stick to my guns here. Put solution in the top of this pitch deck, really small. It shouldn't be the biggest text, but just let us know where we are, and your headline should speak for itself. And some people say, but Ed, if your headline's good, everybody should know exactly what point of the slide deck that you're in. The problem is most of the time they're not good enough, and you just want to help yourself. It's kind of like putting numbering your pages or putting at the top of your book, like what chapter you're in. But let's look at this solution. So we've got, the problem, too expensive, environmentally unfriendly. We're just going to go with that. And the solution, we're saying we're more automatable. Vertical integration results in lower costs, carbon cost reduction because of increased spatial utilization. And residents thank us. We provide 4x space and we're better value. What's your response to this slide?
I want to add that I like that solution. You're not hurting anyone by putting that, solution up there, either in small font or creating a sentence that conveys that. I agree. I think you need to really lead these investors through a deck, and knowing that they have minutes I'm assuming something that's been like an email deck. They have minutes to look at this, and you see 10 a day. Imagine they're seeing 20 a day. So I do agree with that. I agree. I think it is speaking a bit. So, okay, so let's go back. So the problem is they're saying that there's a lot of carbon and that things are expensive.
Okay,
Right.
so
Sorry.
I'm gonna pause you there for a second.
Yeah.
So Kirsten is doing what a friendly advisor who wants to help you will do, right? She's trying to extrapolate, and I'm getting crabbier and I'm getting crustier and saltier in my old age, where I'm not even going to do that anymore. I'm going to say we lost you at the problem, and the fact that we have to go back, the fact that Kirsten had to go back to the problem to try and figure out your solution, now we've lost. Like, this deck doesn't work. Right.
Yeah.
And so this is the issue. And we're going to do a little role play, and I'll get your feedback, Kirsten. But imagine, okay, so we have reimagining homes. It's just we got way too much that's going on here. And you got the 4 data points and all those things. And first
the bottom images could be, in my opinion, could be taken away from this slide.
Absolutely.
It could just be those. Yeah.
Because they don't make sense. But this whole reimagining homes, that's your opinion. That's fluff. That's right to the customer. So let's go back and let's just pretend. So I'm going to redo this pitch deck, and I'm going to pitch you live without the use of slides. I'd say, okay, Kirsten, you're an investor. I'm going to say, Kirsten, according to studies like the census and, et cetera, homes have dramatically increased. They've grown 400% year over year, basically squeezing people out of the market. And on top of which, these homes are very environmentally unfriendly by 30%, according to the EPA, Environmental Protection Agency, according to this last study. So I go, okay, great. So you understand the problem. Our solution is we build homes using a new way of using the space properly that come in 10% less than the market and have been proven to reduce carbon emissions by 90% because they're smart and they're clean homes. Problem, solution. What is your reaction?
I would immediately want to know what my return path is.
As far as your money's concerned?
Yeah.
Okay, great. That's a good sign. The fact that Kirsten then moved on to, all right, I understand. Now I've got more questions. Now you know your pitch deck is doing things properly. But if Kirsten came back to me and said, I need more information, I still don't understand the problem, let's go back and start asking me questions about my problem and questions about the solution, then that means that my deck has not succeeded. So we're looking at this on how to streamline everything. So if you had a succinct problem statement and a succinct solution statement, now let me just blow through this a little bit here. Team, unless you have won a Nobel Peace Prize or you're an Academy Award winning somebody, you've gone to the moon, don't put your team up front, put your team near the end of the slide. This is not helpful.
Agreed.
Yeah, like it's not there yet. So the next slide after problem solution should be market. We're not even looking at market yet. We're going to competitive analysis. I'm going to leave this alone because we just take for granted. The need for ADUs. I don't even know what an ADU is. Someone explain to me.
They're like external properties on your property, like an external structure on your property. So now I am lost because that did not look like an ADU to me.
Okay, yeah, exactly.
This was an ADU.
Now, if you're all of a sudden bringing ADUs, you haven't brought up problem solution. You haven't included
transition to multi-unit.
The fact that we're having to spend this time processing this means this pitch deck is lost. So then the untapped market. Okay, so you may say, why not?
Doing there.
Clearly, this is for Canadians, and we're appealing to this, and you want to put that right away. If you're going to say this is for Canada, and you want the investor to go, I'm investing in Canada, then say that up front, making Canadian homes cheaper or something along those lines. We have 68% margins. I don't believe you, but that's okay. Key milestones. This slide makes no sense to me whatsoever. $2 million to deliver homes. Is this your ask slide? Are you saying you need to raise? So this is where you're missing information. If you put ask.
Also a dollar sign.
$1, yeah, 2 million to deliver homes. Like, we're missing information and use of funds, and that's it. Okay, so I've demonstrated, and to this founder, we're going to send you what should be in your pitch deck, and we're going to let you know where you're missing and send you to our free resource at Startups.com to your pitch deck. Your pitch decks, for everybody, you should be following the general outline like this: problem, solution, market size. All right, next. How it works? Oh, you make money. Go to market strategy, you've got one. Competition, team, traction, and then maybe the ask, maybe you got some financials. You got
financials.
Yeah, but if you're
somewhere in the end, towards the end, with a business plan, kind of in the like getting into the weeds section.
Exactly.
I mean, of course, I'm going to say that, right? Because this is what I do. But I do believe very light financial pitch deck slide is key.
Right. If you would have said all the things up front, and this pitch deck would have had all those things in order and we would understand the problem solution, market, how much money you make, and you came up to this, we have 68% margins. First of all, I don't believe you because I'm savvy enough to know, trust me, homes do not have 68% margin. But if you showed me this and then you had some math to explain it based on our proprietary process, you able to back it up with just a little bit more, then this slide would be powerful. Now, you lost me at ADUs. Is this, you have 68% margin on ADU? Because I'm looking at this, Kirsten, I don't know about you, but that looks like an ADU. Like what is that, like a grandmother suite or? Right?
Yeah, because like,
that's not the home.
So maybe this is the view from a house and then they have it. So no one has the size of a lot. This is very expensive to have the size of a lot.
So maybe what they're saying, this startup is saying, we're making things affordable by building ADUs, like smart energy. The problem is now I'm making all this stuff up.
That doesn't solve anything about the beginning of the problem statement, because an ADU, you either have to rent out for an Airbnb or you put your grandmother in it or something. Like ADUs are not, as far as I know, I don't consider them the sole unit that you live in. They're always an extension on your property.
Yeah.
So yeah, we definitely missed something.
So again, demonstration. And this is where founders, they can get frustrated with me, but I literally will ask them to explain it to me like I'm in junior high and you came to my school for career day, because and I'll ask, and founders will a lot of times have an amazing business idea. Like, Will Schroeder and I were talking about a founder, and he was like, "You got to give some weird advice." And I was like, "I don't understand what the business does." Once he explained to me, I was like, "Oh my goodness, that is weird advice." And then Will tells me it's actually a really good business concept and idea. And I'm like, "That didn't come out in the pitch deck. I have no idea. They haven't been able to explain it to me yet." And so that's the reason that you want to get your story completely straight. And if Kirsten, a peer who wants to understand and wants to help you can't understand it, she's doing mental gymnastics, then an investor is not going to be spending their 90 seconds going through your deck any further. So there's some advice for that. Okay, so hopefully this was helpful for everybody in terms of how we process pitch decks. And we're going to do one of these pitch decks every single time because I like getting these opinions from our guests. And that way it's not just me, shouting out into the void and the abyss. All right. So next, thanks.
I have empathy for this. Like to everyone listening, like it is difficult to make a pitch deck. I don't want you to think like it's so easy for us to armchair criticize as we're sitting here and you put all this work into it. It is hard. And I think you need to step back repeatedly and look at it as if you've never seen it before. So if that means maybe having to look at it the next morning and take a fresh look and put yourself in the shoes of someone, I think you have to do that repeatedly and say, if I knew nothing about what I just wrote here, how would this come across? Or show it left with the question of which version of a pitch presentation, and a lot of the stuff that we asked about would be verbal, or like which one was. So for those listening, you maybe want to add a little bit about that, but there's different types of pitch decks for folks.
Well, you're being incredibly empathetic, and I appreciate your approach always. And it's always a good reminder. And definitely there's different, and that's what we're going to cover through these different shows and the way that we are going to critique these pitch decks. What I really want to get to was some more questions to you. So Q has generated some questions. She's polled, researched, and asked ChatGPT, and like we do the whole thing on what we need to get out of your head, Kirsten, for all our founders out there. So we're going to do what I call the lightning round. And what will happen is Q's just going to...
The hot seat.
It is. Q's just going to pepper you with questions back and forth. I'll jump in where I can.
Stretch it out.
Yeah, exactly. That's all you have to do. And let's see what we come up with. Q, go for it.
For an early stage startup, what's the most important factor to get right when creating financial projections for investors?
Ed, what do you think that means? Like just the seed, angel seed?
Very early I would probably say.
So, because it's different for Series A. To get right would be unit metrics, unit economics.
Yep.
I think that's like the most, if you have to pick one, what would you say, Ed?
Most important?
Well, let's take a moment to talk about this. Kirsten, what goes into unit economics? Because I just throw it out there willy-nilly, like I know what I'm talking about. If you're talking with a founder and they're like, I need to figure out my unit economics, what are you taking them through? What are you asking them?
Well, it's all the different sections of the process is how much money are you going to spend out and where in order to get sales? And then how much does it cost for that thing you're delivering, service or product, to get out into the world in relation to how much you've spent to get attraction and to get those sales? And then internally, what does it take, humans and office rent, copy paper, I joke because no one has that anymore, to support that on a monthly basis, equivalent to the investment that is coming to you in stages? Because you're not, in case anyone doesn't know this, you're not handed a $2 million at once.
That's the perfect way to explain it. I love the way that you broke it down into 3 levels. You did it better than I would have. So riffing off what Kirsten says, let's look at the 3 levels. So first you got, what are you selling your product for? So let's say $10, all right? You sell your product for $10. What did it cost you to get that person to spend that $10? Now, let's say you spent $2. This is your unit economics. And you have to be able to explain to investors straightforward. We spent $2 to get a customer. So now you got $8. And then what did that product cost you to get there? If you're a CPG, you may say it cost me $4 to get that product out there, right? And then you may say with software, oh, it only costs us $1 because our stuff infinitely scales, right? So, and then you have to think of all the other stuff, your office, salaries, everything like that, which goes into your net margin, right? So after you calculate all said and done, and then an investor's going to look at that and say, based on this, how fast do they have to grow? When are they going to run out of money? And how am I going to get paid return? So that's how I would calculate.
Yeah, exactly. And I want to add one other level of complexity there. You need to figure out the life of that sale.
Right? Lifetime
Dun,
value.
dun, dun.
Yeah. Right.
So if you sell that, but that person like is only on for a month, you're negative. If it costs you more to get it out in the sale than you're going to get from the customer in their life of being a customer.
That's right. If you're upside down, and this is the reason, lifetime value. That's why SaaS platforms are very popular. They're kind of falling out of style right now, just because of macro trends. But the reason SaaS was so popular was if you got a business to commit to you for $100 a month, them moving away from your software was pretty rare, and you could calculate how well your company was growing based upon how much of that $100 a month you retain, which is net retained recurring revenue or revenue, right? And so that's where it helps with the unit economics and all the things that you're going to do. And those are things you want to calculate. And by the way, I see some Q&A coming in there. So all of you in the audience there, feel free to blast us with your questions, and we'll pause the lightning round to make sure that we answer them. Jen, I saw one ping. We got a question.
Yes, we do have a question in the Q&A box from Chris. It says, pricing strategy for new SaaS B2C product. What are some benchmarks or best practices?
That's a really great question. So I'll go first. And Kirsten, if you got something you want to throw in and add on that. So here's the thing. If you are trying to go in and price your SaaS, and you are entering into a competitive landscape where there are other companies who do what you do, you just happen to do it differently, you got a different take on it, you should try and price your product 20%, I like to say 20% lower than the competition. If you can compare apples to apples, oranges to oranges. If you are competing against Monday.com or Salesforce, but you only do a fraction of what they do, then you can't use this model. But if you see comparable services out there and you come in and you say, we do exactly what they do, but we do it better, plus we're doing it 20% cheaper right now, then you'll start to get their attention. And so that's how you do it if you've got competition in the marketplace. Kirsten, any thoughts on that before I go to the next?
Just that for all benchmarks, it takes some digging. You have to be really creative. I've had some clients find some amazing statistics in the most wild places, like Silicon Valley Bank has a wine report. Who knew?
Yeah.
So like you can actually find benchmarking info if you just dig hard enough. And that would be my only thing I want to add to that.
Next, let's talk about if you're doing something that there isn't a precedent for. You have to use value-based pricing, and that's where you're going to have to experiment. For example, when streaming first came out, nobody knew what to charge for it. Nobody had any idea. So they started charging a certain price, and you go out and you test it. So you say based on value. So you think to yourself, well, if people are spending $100 a month on, and I'm just using round numbers, on movie tickets, movie rentals, late fees, we're going to take care of all that. We're going to charge them $10 a month. So it's a 10 extra solution. So we're going into the market at $9.99. Let's test it there. And then you experiment. Then what happens is you do price optimization. So once you have enough people and you're looking at it, you start to optimize your price. You increase your price a little by little until you lose the bottom 20% of your customers. This is where founders freak out. But Netflix has been doing this, Disney, all the streaming companies are doing this because the bottom 20%, you don't want them as customers anyway, and it's less efficient and all these things. If you can optimize, what happens is the rate of your price increase allows you to make more than what you lose, and you get better customers. So it's all optics and everything like that. So when you're pricing SaaS products, you either go in with competitive analysis or you go in and you try something and you test it, and then you slowly optimize prices to increase your pricing margins. When you get investment, they're going to be asking you for that. In the beginning, you may give it away for free, but eventually investors are going to make you optimize price to squeeze profit margin out of there. Kirsten, what are your thoughts?
I like to call it how to boil a frog.
It's good.
Yeah, I don't know if you guys are familiar with that terrible anecdote or whatever it'd be called, but you turn up the heat slowly. They don't even notice it. So you just keep increasing those prices slowly. And generally, if you keep providing value, a lot of people are kind of stuck into yours unless someone comes along, a competitor comes along and takes them away. So you have to keep an eye out for that. The other thing I would say was going back to the financials is he's talking about pricing it from the top down. So you need to know what that means and what your most likely deficit is as you're going and running and trying to get a profit. So if you're not basing what you're charging on what it actually costs in your business, you're reverse engineering that. There's two approaches and you should probably do both, but there's the top down and the bottom up. You'll hear that phrase a lot on modeling. So if you're going to go that route, you need to know what's happening internally, and most likely it's not going to make a profit for a while.
That's great. Here's another strategy. This, you combine top down, bottom up. I will often go in and I will say, all right, how much would this problem cost you if you can't solve it? And if they say, all right, $12,000, and I go, great, I'm going to charge you $1,000 a month because my solution is going to get there, and, try it. So now they're like, wow, this great. That's value add, right? And I can solve that. So play around with it. The best case scenario is you're going to be working off the data that customers give you. Like, I saw a comment in the chat. Founders struggle because they're so close to their business. Like when you're reading your own deck, including doing your own pricing, things like testing with as many people as possible helps. Test. Vadim, our lead advisor, says, go talk to another human and find out, get their opinion. And that's going to be the best way to do it. Because in your mind, it always sounds better than it really is until you talk to someone. And the best feedback you're going to get is when you tell someone the price. All right. So let's move on to the next question. Bullet round, keep it up.
What's the best method for calculating CAC in the early stages? And how can founders estimate it if they don't have many customers yet?
I don't have any customers yet. You just do the math. It's going to change as it evolves. So go ahead and you can easily find out what marketing channels are going to cost. Like that's hard. You can immediately, check with Instagram, check with Facebook, check with, you're going to do a pop-up, like all the things you want to do. I always recommend getting really creative and try to find things that cost you less. That's always interesting. If you can guerrilla market, jump on someone else's marketing, just really brainstorm all your options. So once you get those hard costs, you just multiply by your intended amount of customers over you just have to project. That's where I say the assumption, sorry if I'm speed talking, I'll pause for a second. The assumptions and the decision fatigue is where things break down. So what I'm hearing in this question is that it's I'm afraid to put down a number because I just don't know. When you're working on the model, you start putting in numbers down, like as if it's a rough draft or a sketch, depending on how your mind works. And you see how it populates in the financials, and you go back and adjust, and you see how it populates and you go back and adjust. So it's a lot of back and forth, as well as using your logic. And then when you actually start to get customers and you see a trend, start to see what you think of that trend. Like you might be like, okay, the first year is going to be slow, but the second year is going to kill it. So you don't necessarily follow the same a linear path, but you might be like, okay, this first year is going to be 4 customers a month. And like, I understand that.
Yeah, that's great. I like what you said about assumptions and going research. Nothing stops you from going and saying, okay, how much would LinkedIn ads cost? And let's say I'm going to spend $1,000 on it. And then it'll tell you how many people you're going to reach if you spend $1,000. And then you can look up data and say, okay, the average LinkedIn campaign returns 3%. Let's say they become 3%, become my customers, and they spend this amount of money. And what Kirsten said is so smart because it's like a draft. I like the way that you said it, because financial models, they're designed these days. You got an Excel spreadsheet. You can change the number. Like you can spend more. You can increase the conversion rate if trends change. And you can see how it affects your financials. I think in the beginning stages, if you work with someone like Kirsten, just to understand what goes in a financial model so that you can tell investors, we built a financial model based on realistic numbers and we're waiting to see, and here's how we're going to test it. And maybe put $100 through it, test it for $100 and say, look what happened, and start to optimize. Nothing stops you from doing that to build your financial model. I like that answer. Next question.
How can founders determine if their unit economics are sustainable when they're just starting out and have limited sales data?
Same answer. Sorry to be so short. You really just have to start plugging in the best guess that you can so that you can see how it works itself out overall in the business. Can I mention that I use an app over spreadsheets? Is that going to be blasphemy?
Yes,
here, guys?
please do.
All right. So I find, when I work with clients and I recommend an app, can I give them a shout out?
Yeah.
Finmark. They got acquired by Bill. So you might see the Finmark by Bill, bill.com. Finmark, Finmark. So I now put clients through that, and you just have to put in numbers and see how they work, and then update and adjust. It is a dynamic thing. It is your roadmap. Even after you get funded, you continue to use it for your forecasting and adjusting and evaluating your business. I can't stress this enough, and this is pretty much my soapbox, is it's not a one and done thing. This is really the lifeblood of your business, so that you're not just getting an immediate dopamine hit and like your investment. This is like, how are you going to be that 10% unicorn, or at least the 50% that does well and exits? So this having the foundation of what actually everything is costing for your business is going to be what keeps you going. The other analogy I like to tell people is that you only have, imagine a pie, a piece of like an actual like apple pie, if you will. That's it. That's all the money you got. So if you spend more money in this section, you're taking money out of a different section. There is no like second pie over here that you can grab from. You have the unlimited resources, but opportunity to spend 10 times more. Because like everything for every, I want Salesforce, I want this, I want 5 amazing developers, all this stuff, most likely don't have that. So you just have to work within the economics that you have. I hope that answers that.
It does. It is a guessing game. It's a moving target. Founders should be okay with that. Investors are okay with that. And you brought up a new thing. I'm old school. When I was doing financial modeling, it was an Excel spreadsheet. I worked on Lotus. Okay. Like this is how old I am in terms of spreadsheets. But then you get to Excel, and then I'd have to go and read another person's financial report and rebuild the spreadsheet according to all those things, and had to do all my formulas. But now you're saying, Kirsten, there's software that does it for you. You can just plug it in and it'll start telling you, you got AI, you got access to so much data now. It's easier than ever which gives you less excuses not to have done the work in creating those assumptions as far as unit economics.
Exactly. There are people that will be like, I'm allergic to numbers, or, there's a million legitimate friction points, but then your goal is to go and find people that are smarter than you, like myself, in this area, to help you and be a cheerleader and be a collaborator. And in that process, you get coached and you learn things as you go, because if you actually do get funded, this is the minimum level of education that an investor and your colleagues are going to expect. So you're going to have to learn it one way or the other. So you just got to figure out how you're going to fight that battle.
Right on. Q, how many questions you got?
One more question.
Let's fill it in. Kirsten, I'm pressure on you. Have to be able to answer it in 2 minutes.
Okay. When presenting financial projections to investors, how detailed should they be? And what specific metrics do investors care about most in the early stages?
Favorite question. Okay. So I personally coach my clients into having a financial pitch deck that has whatever your particular industry, your business, the KPIs, the top. So if it's subscribers, if it's, sales, or depending what you're doing, a little bit of top level income statement pieces of information. Depending on what stage that you're at, you might have something like a headcount, revenue divided by headcount, depending, again, like each stage and each particular industry wants its own thing, but you want to start showing on your deck things that the investors, is a bit of a longer than a 2-minute answer, so I can circle back to that privately if anyone wants to reach out to me. But you want to kind of show these like top level things that the investors are going to immediately be like, okay, I know that this is in your industry and I see your progress, as well as, of course, like your cash runway at the bottom. So that would be on your slide. So keep it very just at like 4 to 6 types of metrics, maybe give a percentage on increasing if you're showing year over year. Again, do that 5-year scope. I've been doing something that's hit and miss, where I do the first year in more detail. So the first quarter and I show quarter 1, quarter 2, quarter 3, and then year 1, and then year 2, year 3, year 4, year 5. So I really like get more granular the closer to time it is. What that should do is show the investors that you are gathering that information from a already created financial model that they will then ask you to put and deliver to them afterward.
That's good.
So in the slide, just enough to show them that you know what you're talking about and some top level numbers. Because again, the story you're telling them is, you're going to invest in me because you're going to get money back. Like, remember, that's what you're selling. So, and then they're going to say, show me like where you got these numbers from as a follow-up.
Yeah, that was a great response. Very succinct. And let me tell you, if a founder showed me a slide like that and knew what high level numbers and demonstrated that they have more behind the scenes, oh, I'd be so happy. But it's very rare, unfortunately. So make sure that you dot your T's, dot your I's, cross your T's when it comes to your financial modeling. All right, thanks, Q. Kirsten, this has been great. I'm going to give you one more minute to give us a shout out, not give us a shout out, give yourself a shout out. Let founders know where they can reach you, how you like them to contact you, how you would like to help them.
The best would just be go to my website. I don't know if there's a way to plug it into the chat.
We'll put it in the description. We'll put it all over the place.
Perfect.
Yeah.
And I'll just verbally say it. It's vertconsulting.com. It's got a silent E. So VERTE consulting.com. Go ahead and fill out either book a meeting, a discovery meeting, or contact us through the form, and we can respond with the appropriate next steps. Otherwise, find me at Startups.com. I am a community advisor there. I host a financial modeling webinar once a month. I also host other things and participate in other things. It's a really great community, loving it there. So I think that those are the places you can find me. I guess LinkedIn as well. I post a lot. I post daily on LinkedIn. Overwhelming thought leadership if you want to hear all my opinions and soapboxes.
We will make sure we include all that contact information. Thank you so much, Kirsten. This has been great. We don't get to talk about financials very often, so you're an important part of this community. Q, as always, thanks for the great questions. Jen, thanks. You had light duty today, just watching our chat. That's it for us. We are here every Tuesday, Wednesday, and Thursday at the same time. We've got great shows, great guests planned for you all. Appreciate everybody checking out. And if you are watching this on social media, the YouTubes, wherever you are, please leave a like, comment, subscribe, do the social media thing. Always helps us out. Thanks again, everyone. We'll see you in the next episode of Startups.com Live.